Hey everybody, Joe Malone here, coming to you live on Dallas Trading Floor. I think we're up here. It is Friday, and the market is it's the market, and so let's kind of look in on a few things. Going to get the banner up here in just a sec. It's the 16th of July, and believe it or not, this is show 336. Wow, that's a lot of shows. No, 336 is it 336 or 330? Yeah, it is 336. What do you know? Wow. Okay, that's a lot of shows. I didn't realize I'd done that many shows. Okay, well, here we go. Just wanted to kind of get into some of the charts here, and let's kind of see. Let's check in on the Nasdaq, see how that's trading right now, and I'm going to pull that up here in just a second. So here we go. All right, and the Nasdaq is pulled back to the 21-day line. Hopefully we're going to get a bounce here. It's off a little bit today. Seems like it is, kind of pulling down into the weekend. Now, we do have some splits coming up. There's two splits coming up. I have closed all my positions on them, but Shoe Carnival will be splitting 2-for-1. They'll be trading on the 19th. With the new split shares, and of course Nvidia is as well. So those are two things to kind of look at. We've definitely pulled back below the 10-day line. Hopefully we're going to get some support at the 21-day line. This is the Nasdaq Composite. The key level, of course, is about 1450. We're a little bit below that, but we seem to still be kind of, in a decent upward trend. I want to kind of look at a few things here. Kind of look at some psychological indicators and see kind of where the market is moving right now. So what I'm going to do is I'm going to pull up some kind of interesting indicators, ones that I like to look at, and take a look at some of those indicators here. Kind of get an idea of where we're going. Basically, we did have a warning from Janet Yellen on inflation, so that is significant. And what I want to kind of do, so we're going to have some inflationary pressure. It looks like, obviously we're all seeing that. So that should be good for some of the oil stocks, though it's been a little bit down today. So we'll see. We'll just see how how it's going to line up. But let's go to some of the psychological indicators. Let's see if I can get that. First of all, let's look at the stock of the day. Before we go to the psychological indicators, let's look at the stock of the day. I'm very interested in what this has. Okay, it's Callon Petroleum. That's interesting. Okay, let's kind of look to see. I'm going to pull that up here. And the thing is, yeah, this may be the stock of the day, but I don't like the action on it. So let me just pull it up here and show it. Here we go. Basically, Callon Petroleum, and it definitely has broken decisively below the 10-week line. So I wonder if there is a movement out of the oils. I'm interested to find that out. Kind of interesting there. Let's see. Also, I want to go to my stock list, see how I'm doing here, see what's going on there. And I'm kind of showing. Let's take a look at the long-term leaders. That's AMSL. Hold on. Let's see if we can. Let's see if I can show my. I didn't have a lot of time, unfortunately, to get ready today for the show. So I'm just going to kind of show where I'm at, what stocks I'm in currently. Currently, I'm in Apple. It's down a little bit today, down about 1%. CrowdStrike, it's up, which is looking good. DocuSign, it's up again. I did buy several. I have been buying positions in DocuSign. Even though I did sell it, take a profit, I've, as it's reversed, I've been DocuSign. So it's looking pretty decent. Of course, I'm in L Browns is off a little bit. I did also, I also did buy a little bit of Microsoft today. PayPal is down, Nike is down, and Santander is down. So just kind of wanted to get that in there. Let's take a look at the small portfolio. Let's see. Oh, kind of see how that's trading right now, and pull pull that back here. There we go. And so basically where I am, and this is in the small portfolio, I'm up about 4% on Nike. Now I did up about 3% on Apple. I did weigh in a little bit on Microsoft. I did buy another full position in Microsoft. It's up about 3% in 25 days. But again, I have 2 buys in there. DocuSign, I'm in there, just up 1%, not a lot. Santander, of course, we're down a little. We're basically even on Santander. This is the auto finance company, and then we're down about 2% on CrowdStrike. I just kind of want to give you an allocation here, sort of where I'm at. And as you can see, I'm trying to whittle away at that cash, trying to get trying to get more positions in here. Basically, I've got a full position in Nike, almost 2 full positions in Apple. Essentially a little bit more than a full position in Microsoft, and in DocuSign. And Santander, I've got a half position, and then in CrowdStrike, I have a full position, and the rest is in cash. So this kind of gives you an idea of how it's going. Now, this is so far this month based. This is a swing trading portfolio. As you can see, most of these have been losers. I did take some profits in DocuSign, and then I came back in the stock. We're up about $430 in the model portfolio here. So that kind of gives you an idea. We're on track right now, since the beginning of the month, about 4% up on the portfolio. Typically, we like to do, about 8 to 10% on each month, depending. So as you can kind of see, just roll it down here. We're up about 430, and then last month we had a pretty good month, and we were up about $1,500. So just kind of wanted to show you that. And let's see if we can do some of the psychological indicators. I like to look at the psychological indicators, especially the debt ratio, because I think that's very, very key. And let's see if we can put that, if I can put that up for everyone. Let's see. Okay, so this is, okay, where is that? I should have that in the research here. Key, and we should, well, okay. There we go. Psychological indicators. That's what I want to see. All right. So I'm going to look at the margin debt, and this this is one of my key one of my key ones to look at to see sort of how we're doing. This shows a market top, and I think we did kind of avoid a market top here. We got up here to about 55%. That is about as high as it's been. It's been pulling back. This is a good sign that we may not be at the top, but we have a very this is a key indicator because we have been pulling back since the beginning of the year, but we're still our margin debt is still very, very high. Is still very, very high. So the reason I think it's been getting hard to trade this market is we're sort of at a market top, and we've got to be a little bit careful about exposure right now, just because of that. And it's kind of one thing that I kind of really wanted to put out there to everyone. So without further ado, thank you for holding, and let's get to the stocks. Okay, let's look at Disney first. Disney is in a downtrend right now, and oops, DIS is the symbol. There we go. I'll pull up that chart for Disney. I think I was talking to some of the people in the Discord room, and I didn't annotate this one. Basically, what's happened is that Disney has been in this downward trend. Now let's put the temporary on there and put the reversal line. This is the reversal line, meaning that above this line, below this line, it is basically capital is flowing out of it, and as it moves higher, that's where the capital has started to move back in. Disney has had a reversal, but it's pulled back down to the 21-day exponential line. That's this little green line here. So currently we're trading at about 179. We're quite far away from the proper buy point. The proper buy point on this is at 203. But because we had a prior buy point here at 183.40, this is probably where we should consider, if we want to get into Disney, that's probably where we could possibly set an alert, because that was a prior buy point right before the current buy point. And so there definitely is some resistance there, and we're very close to that level. So here's the thing with Disney. Right now, it's got a relative strength of 72. I like to see a lot better relative strength than that. So I probably would not be a buyer right at this very moment of Disney based on that. It's a little bit tough on that. Also, the checklist is a little bit weak on Disney. We do have sales that are down, and we have and the big boys, this is called an accumulation rating, the AD rating, and right now the big funds are selling it. So here's what I would do based on those facts with Disney. I think what we really have to do with Disney right now is, we've got to be really careful here, and I would be looking, I would be looking to watch list for right now. And that's kind of really the the thing I think we're going to have to do with Disney is we just really have to watch list this one, because it is in a downward trend. Though it has made a move above, I don't think it's ready to go. So, be careful on Disney, and I think that we're going to have to probably skip. We're probably going to have to skip Disney for right now. We're going to watch list it, but I think that that's going to be really the only where we can go on that. Now let's look at Apple, because Apple is a totally different story than Disney, and of course these are both Dow stocks as well as being in the Nasdaq. Apple, I have been relatively bullish on. So let's pull up the Apple, and it is moved right past. So hopefully I'm going to get a chart here in just a second. AAPL, of course, is the symbol. There we go. And as you can see, it's moving very nicely. It's pulled back a little bit today, but it has moved very nicely. Now, I started early buying here, basically at this, about the 130, about this area here, right as it sort of moved above. So that was working very, very well. I then also purchased another position right at the buy point, but unfortunately right now we're a little bit extended. Now the question is, because it's pulled back so much, we might be able to get another buy at the Apple if it comes down basically to the 10-day line, and I'm going to kind of set an alert there, because I do think that we can possibly buy it. It's extended right now, but this is a very good stock, and it tends to be firing on all cylinders. And this is one thing, especially in this market, we've got to buy the very best, because the market is flaky right now. It's not like it was a few months ago where we could buy pretty much any tech stock and it was working. Right now, there's a little bit more market pressure, so we have to be a little bit more selective about the stocks that we're going into. Right now, many of the best stocks are the bigger cap tech stocks, and they seem to be getting the love. The other area, of course, there are several areas of the market that I really like. One of them is actually retail. it's the retail shoes area, if you can believe that. Also, I continue to like the oils, but the big cap techs is sort of where a lot of the money is hiding, because there's a lot of capital in the market, and it's just looking for a place to go. So the indexes like the Nasdaq and the S&P 500, they haven't been falling down that much, but many individual stocks are retreating. The question is why? Well, the reason why is because the stocks that are getting the love right now are the big cap techs, the Microsofts, the Apples. Those kind of stocks seem to be doing very, very well. So could you buy Microsoft? Could you buy Apple at this point? Yes, I do believe you can. It's slightly extended, but not very much. And this is a relatively slower moving stock. I do see, at least from the trend lines, I do see this moving higher. So let's see if we can put let's see if we can put a kind of a channel in here. I'm gonna put the channel indicator in there to see if I can do that. Let's see if I can. There we go. Okay, so the parallel lines. Okay, so kind of what you're seeing here is we're kind of seeing see if it'll let me move it around. But what we're kind of seeing is of course, if I can get the handle on it. Okay, it's sort of not letting me. So let's see if I can delete that. There we go. All right, let's see if I can get back in with the parallel lines here, and kind of show you sort of. There we go. Okay, sort of how what's going on here. So this is sort of the trend. If I could sort of put it in there. Let's see if I can kind of move it more into position. But as you can see, this is sort of the trend that we're seeing now with Apple. That kind of gives you an idea of what's going on. Now, with this trend, you can see we've come back down to the 10-day line, but I do believe we're going to pull back up into the channel. So my anticipation for Apple is that we're going to see it move because now that it's at a higher high, we're above that 145. I do think that it's testing that 145. If it reverses here, it's probably going to go higher. So Samuel, my take on Apple is this. I think you can definitely buy Apple at this level, but I think you got to be careful with Disney. I wouldn't buy Disney right now, but I would definitely consider a position, a larger position in Apple, because it does seem to be doing much better. Okay, let's see if I can. I'm looking at questions on from TikTok. So hold on, give me a break here. Okay, sir. You made the point about Apple. We get it. Can we move on to another topic? Okay, I guess I did. I guess I did. So let's move to another topic. Let's look at PayPal. This is another stock that again I do have, and I think it is showing very good. I think it's showing very good characteristics. This is another one that I think that you want to possibly take a look at. Now, currently, PayPal is right below the buy zone, so you can still buy PayPal at this level, but it is moved down to the 10-day line. I think if it moves beyond that, then then I think we can. Let's decline that. Then I think we can. It will indeed move higher, but also PayPal is looking very strong. The checklist on PayPal is 100%, which is it doesn't get any better than that right now. So it's an expensive stock. I mean, $249. But what I always say to people is, look, it's better to buy the better stocks right now in this market and buy fewer of them, because these are the ones that are likely to go higher. So I'm very bullish on PayPal, and I do have it in my portfolio. It's nearing its all-time high. Right now, it's very close to 309.14, which is the all-time high for PayPal. So that is something that you might want to take a look at as well. All these stocks that I have. Microsoft, that's another one definitely that we want to take a look at. MSFT. I did buy another full position of Microsoft today as it moved. Now, normally I wouldn't do this because I bought it above the buy zone, but because I had bought early right at the buy point, because I had bought at 264.62, then I could buy at 281. I bought it basically right here at about 281. So I'm kind of want to show you, kind of show you that on the chart here, kind of where I did buy it today. And I do think that Microsoft, again, it's showing a lot of strength because there's just a lot of money out there. It's looking for a place. It's looking for a place to go, and Microsoft has sort of been a safe place. I mean, it's continuously profitable, and it's showing some very good chart action right now. So this is where I bought today. So I bought basically one full position for the small portfolio. And what do I mean by a small? What do I mean by a small? One. What do I mean by one full position? Well, what I mean by one full position is that if you take the value of the portfolio and you divide it by 8, that gives you 8 full positions. So when I put in a full position, I took 1/8 of the value of the portfolio that I had, in the buying capacity that I had, and I purchased Microsoft shares today. So that's what that means. So my first buy was here, right as it crossed the buy point, and then I bought a second buy to bring it up to 2 full positions. But of course, my average price is going to be right in the buy zone. So that's key. You want to try to buy as close, you want to buy with an average price in the buy zone if you possibly can. And definitely did that with Microsoft. So Microsoft is looking very, very good. And I do think that it is worthwhile. Now, it may be a little bit late to start a new position if you haven't already been buying it. But if you do have some Microsoft, this might be a good area to add. And that's indeed what I did. Let's look at VUZI. And that's a question from Jay. Thank you very much, Jay. Unfortunately, this one has been in a downward trend. I know that we don't want to hear that. But as you can see, we have the relative strength line is still very strong at 96, but this is the weekly chart here. We are showing it pull back, and it's pulled all the way down to the 200-day moving average. So that's a key thing that you've got to kind of look at there. I think we're probably going to get a bounce off that, but that does not mean that the overall trend of the chart has changed. We're still pulling back on this chart. We did have earnings here, and the last quarter's earnings were pretty good. I mean, the sales were good, but we still underperformed on the earnings. So I think with this stock, and I just for some reason just switched over to American Outdoor Brands, I think you got to avoid it, unfortunately. It's just not a good place to buy this one. If you're down more than 7%, consider selling this and waiting for a better entry, because this is unfortunately not a good time to be in this stock. All right, Tesla, August 21st, 570 put, crazy idea. Well, you might actually be a winner on that one, because the trend on, several months ago, I said I wouldn't be doing any shorting of Tesla, but I may be reconsidering my position, because let's see, you're out at 570, so that's right. Let's look at that. Let's track that price, put that where that exactly is. So that's right about here, about 570. Okay, so that's not necessarily bad. That's actually a fairly good location for the put, to be honest, because it's relatively unlikely that you're going to be that you're going to have any risk from being exercised on this. So I don't think you're going to have any exercise risk on there based on this chart. What I do think is that if it does, actually, that's just not a bad idea. If it does trend below the 200-day line, this might actually be a very good, a very good way to go. Let's see. This is kind of weird. Let's in this live video, 7 views in now. Okay, did that work? Okay, well, goodness, I don't I don't know what happened here. I guess I screwed up in terms of the live. So let's go back, go live here again. I'm having a little issues with TikTok today. Don't know why, but I am. So let's go back onto TikTok. I'll come right back on. Yeah, there we go. All right. So I guess we're back. I guess we're back on TikTok. We got kicked off there for just a second, but it looks like we're back on TikTok, going live. So anyways, back to YouTube. All right, let's look at JD.com on this. So let's move it over to JD.com. And JD, again, a lot of these Chinese stocks have been struggling because of some of the restrictions, of course, that the Chinese have been putting on it. This is currently in a downward trend, and I wouldn't be a buyer here just because it doesn't. You want to be very disciplined on this. You want to buy it only if it's in a upward trend. Currently, two things are wrong with the JD chart right now. First of all, it's still in a downward trend. It is below the 200-day line. I just think you got to avoid it. The relative strength is 31. So here's the thing on JD right now. I think you've got to be very, very careful with this one. I would be avoiding. I would basically avoid this stock right now because I don't think it's gonna. I don't think it's gonna end well. Avoid this one. So that's kind of what I would be. There we go. So I would be looking to avoid this stock. It's just, here's the thing. There's so many other better plays out there in the market that you can do. But JD right now, this is not a good chart. And, I think you just got to be careful because, you just don't want to, you just don't want to pay, you don't want to pay the tuition because you're going to pay the tuition on this one. If you buy it, you're probably going to move lower. That's just sort of kind of where it's at. We also had, let's see, VMW. I think that, is that BMW or VMW? That's MW. What is this stock? Oh, VMware. Okay, different story. This is a VMware, of course. This was, I believe, I think that Dell spun this one off. I'm not sure. It has been kind of in a little bit of a downward trend. Let's look at the weekly chart to see. Well, not bad. It looks like it may have bounced off the 200-day line. I don't typically, some people do like to buy off the 200-day line. I am not one of them. I like to see something that's a little stronger. So this does not look like a good entry point for me. I want to see it bounce off the 50-day line. That's this red line. Unfortunately, it was getting support of the 50-day line, in the beginning of June, but it fell through that. It came up again. It was rejected. So this is in a downward trend. I think VW. I think VMware, great company, but I just don't think it's a good time to buy it right now. I just think that it's not at an optimal buy point. All right, let's see. Welcome to okay, Tilray. Unfortunately, I mean, I know everyone likes Tilray, but it's such the yesterday stock. Oops, it's really from the past. I mean, marijuana stock's the only really good marijuana stock out there, as far as I can say, is IIP. That's Innovative Industrial Products, Innovative Industrial Properties. Basically, the landlord for the pot growers. That one's good, but Tilray and the other others, you just need to avoid them. They're just not. Everybody and their brother is growing marijuana in their basement, and it's just, I don't know. It's not the profitable venture that it once was. So I think you got to be super duper careful. All right, let's see. This is okay. Let's go to Moderna is going to add, and it's a good time to add. You know what? This is a tough market, but Moderna has been looking pretty good as of late. mRNA, of course, is the symbol. It's kind of cute because that's what they do. It gapped up today. Really right now it's a little extended. Let's see if there's an entry point. I don't think there's going to be an entry point on Moderna. Yeah. The last real buy point on Moderna was a cup base at 178.50. And unfortunately, we've blown way above that. There was an alternative cup with handle at 189, but let's see how this thing trades. Earnings are in 20 days. This is a great stock, but if you buy it at this level and it pulls back, it'll pull back hard. So I'd be a little bit careful buying it at this level. But it is a good stock, and I do think that if it shows another base, then I think we could possibly do something there. All right, let's look at NEE. See if that works. NEE. Nextra Energy, interesting. That's in Juno Beach, Florida. Ah, nice place. Um, with Nextra Energy, basically, it's pretty flat. You know, I've never done well in the utilities, to be honest with you. The utilities are essentially a dividend play. They're not really a stock play. What do I mean by that? Well, you're better off if you're going to own the utility stocks. You want the ones with the best, with the best dividends. Let's take a look at this sector because I haven't done a whole lot in the utility sector. Not one of my favorite sectors, I'll be honest with you. It's primarily, but the big money in here typically likes, likes the utilities, likes the dividend play. So let's take a look and see if we can find the utilities in here. I'm gonna kind of, yeah, there we go. Okay, so I'm gonna go down here to utilities, TU. There we go, utilities. Diversified electric power. Let's look at electric power utilities. Kind of see. This is mostly dividend plays, but I kind of want to look at. Well, the group has been doing good. It's only got a relative strength of 18 though. Let's kind of look to see what stocks are in there. Nextra Energy right at the top of the list. So definitely, definitely one of the good ones. That's for sure. Let's look at the top stocks currently. Evergy, Commonwealth. Okay, so let's look at. Yeah, they're all a little bit off their highs, but let's see if I just want to look at this one. Yeah, this is probably your best bet as opposed to the other one. This is a good company, but again, it's essentially a dividend play. It's 55% funds in here. You know, dividend funds. Income funds are going to be heavy in these utility stocks. That's definitely for sure. They're gonna be heavy in they're gonna be heavily in these stocks, but this is probably the best one. It's almost at a buy point. There's a 65-64 buy point on this one, and the symbol EVRG. Not a big fan of the utilities. I've never done that well in them. But if you're gonna that's not really. But if you're gonna do something there, I think you have to be, if a little bit more selective. You probably want to go with strength. I would not recommend this one, just to be honest with you. I wouldn't recommend it at this point. Let's go to the next question. Been having some issues. Okay. All right. Can you check space? Okay. So let's look at space. Okay. This is Virgin Galactic. This is a pure. This is a pure speculation stock, and I've done very well with it. But they just decided to issue a whole lot more new shares, so it's been tough. This one's been tough to play. It has pulled all the way back down, as I kind of expected, to the 200-day moving average. That's right here, and it's currently trading at about $30. What gives? Well, it may get some support here, or it may not. They just almost doubled their shares. Earnings are in 20 days, so I think you just got to watch this one for now. I just really think you have to. It's not really playable at this point. We are getting to a point where we may see some support. It could pull as low as about 1450. That's basically right here. But because of the issuance of the new stock, I think we're going to have to lower expectations. So right now, it's not necessarily the greatest time to be in Virgin Galactic, and I think that's going to be an issue going forward because it is it is going to be diluted. That's definitely for sure. All right, let's look at Apple again. This is a question about Apple. Apple really is a technology safety stock for a lot of companies, and I think I talked a little bit about this. And what I've done is I put a channel in here, and this kind of shows you how we kind of expect, at least for the near future, for it to trade. I do think we're in an upward trend on this, and I do have, I have been accumulating this for my own portfolio. I started to accumulate at the reversal, and let's kind of draw the line here to show you kind of where that is. this is sort of where I started accumulating. As you can see, early buys below the below 137. That's kind of where I started because of this reversal line, and then I've been riding it up. I did make another buy right as it moved into the buy zone, and then I did another buy while it's in the buy zone. Right now, Apple is extended. I still think you can buy it, but it is extended, so you got to be concerned with that. What do I mean by extended? Well, the way stocks trade is that they kind of have these little shelves, and these are called pivot points or buy points. If the stock moves above the buy point and can close above the buy point, then typically it will get some support at that level. So the further you get away from a buy point, the less support it has. So right now, typically between the buy point and the first 5% up, that's where you're going to see most of the support. After that, it becomes a lot more difficult to get support. So right now, Apple is extended. It's trading at 146. The top of the buy range, the top of the buy range for Apple is basically about 144. So we're just a little bit past the top of the buy range for Apple. So you could buy it at this level, but be a little bit concerned because at this level, there's a chance that it can slip back down to that 137.07 buy point. So as it gets further away from this buy point, it becomes a little bit weaker. So we basically really need to wait now until it moves to the next buy point. And really, I think that, we do have some potential for that happening because the highest high of Apple was 145, and now we're at 146. So this is why I say I think you could buy it at this level, even though it's a little bit extended on a classical basis. So I still think you can buy Apple. I do think it is going higher, but you've got to be careful and time your buys correctly because you can buy it and then it could pull back. But I think it potentially could pull back. Let's look at MU. Okay, interesting. Let's look at NVIDIA because NVIDIA, of course, is slipping. If you've been watching me any amount of time, you'll know that I was very heavily in NVIDIA. I sold most of my shares and all my spreads. Well, I sold them all actually on Monday or Tuesday this week, and that really conforms to sort of what I've been trying to harp on for the last few months, and that is the way stocks typically will trade is that after the announcement of the split, they will typically run up until they get to close to the day of the split. And the split, of course, on NVIDIA is going to be the 19th of July. So we are going to see that's going to be Monday. So by Tuesday, it's going to be trading as a split share. And of course, it's come way, way down, as you can see. We were selling up in here, as you can see, and then it broke the line, and now it's at 726. Basically closed all the spreads and everything I had. I was buying on the way up, and then I sold out, and then now it's pulling back. Now, what I think is going to happen is it's going to bottom, and it's probably going to come back down to an adjusted basis of about 648. But there's a potential, and let's calculate that. Because what's going to happen, I believe, with NVIDIA, is that currently it is trading for 726. It could fall as low as I think about 648. So let's take a look. 648 on an unadjusted basis, and then it's going to split 4 for 1. We're going to divide that by 4, so that's going to give us, I believe. After the split, we will see the shares of NVIDIA trading for about 165 to about 185, okay? And then I think that may be another entry point for NVIDIA. Remember, when it goes through a split, what happens is it runs up, and then the time to sell is right before the split, and then after the split, typically there will be some selling pressure as people rationalize their portfolios. And then on the other side, if it's a really good stock like NVIDIA is, I think it will continue to move up. But right now, you shouldn't be in NVIDIA. You should be out of it, waiting to come through the split and then possibly give you another opportunity on that. So let's look at MU as well for Hans. Thank you for watching, Hans. Let's see. Let's look at MU. MU. And take a look at the Micron, of course. One of my all-time favorite stocks, but I've never been able to really make money on this one. I really like the company. And by the way, they have actually a foundry right here in Allen, Texas, right up the road. So I'm kind of familiar with this. Relative strength line is retreating, and that's one of the things you have to do. I'm gonna look at this. So we have a relative strength line that's retreating. We're selling. It's selling below the 50-day moving average. It just broke down below the 200-day average. Now, if there is going to be a bounce, and I think there may be, it's probably going to be here. So we're probably going to see this move up. But this is, I think, possibly a dead cat bounce, as they call it, because I do believe that at least for right now, we are in a downward trend on Micron MU. So I don't think you really want to be in it until it can form a base and then move to the higher high. What do I mean by forming a base? Well, what needs to happen here is that the selling needs to go on, and then the selling needs to peter out, and then it starts to making its way back up and form like a cup base. It does appear that we may be getting close to the end of the selling, because on the weekly chart we have declining volume to the downside. So that's good. So the people that are selling probably are going to stop selling. So look for a reversal on Micron, but probably not until next week. It does appear that we may get a bounce here, but you don't know, because we will see. Based on the volume that I'm seeing, it looks as if we may be running out of sellers, which would be good, and that would probably force the stock higher. So let's kind of take a look at sort of some of the statistics to see. We do have earnings that were excellent, and we just came through earnings at the end, for the second quarter, and they were up. So looking very, very good on the earnings. The sales were up 36%, and the profits, more importantly, were up 129%. So we may be seeing, hopefully, a reversal on this probably next week. I wouldn't be in this one right now, Hans, but I think if you wait, you may see this bounce off of the 200-day line. So that's kind of what I'm looking at this chart. All right, let's look at the SQQQ. This person likes to lift dangerously. The SQQQ, for everybody out there, is a leveraged ETF, and that it goes against the QQQ, which of course is the Nasdaq 100. So the SQQQ, can be a good short-term play. I don't like to use it, as you can see in the chart. We may see it possibly reverse higher, but currently, and this is basically the way, currently, as you can see, the trend is not our friend right now, because the Nasdaq has been making all-time highs, and of course this is inverse to that. So would I buy this thing? Probably not. I want to see, the market needs to be in a full-on retreat before I would even consider buying this one. Now the TQQQ, on the other hand, is one that goes with the Qs. This one's a little bit better. As you can see, it's actually moving up, but even it is getting a little bit of weakness. We're starting to see some topping action in the market, and so it's going to be difficult, really, Byron. These next, right now it's a little bit harder to buy than it was just a few months ago, where we were just pretty much anything that was tech was doing good. We're sort of getting to the, I get the feeling we're getting to sort of a top of the market. That's why you want to be very careful in what you're buying. You're buying on the proper buy points, and you're putting your stop losses in very tight. Not just 7%. Most of my stop losses are 4 to 5% down from where I bought them. And the reason for that is because this is a volatile market, tough market to trade, and one that's not as forgiving as it was before. So wouldn't recommend the SQQQ. Okay, how's Skin holding? Skin, I don't know what Skin is. Is this new Skin? SKIN. Let's see. SKIN, yeah. There you go. Skin. Provides personalized solutions. Huh. Okay, so it's anestheticians. Interesting. I don't have any knowledge of this stock sheet. I will be honest with you. Looks like a relatively new issue. 1, 2, 3, 4, 5, 6, 7, 8. Looks like it almost. So it's been about 8 months out there. So we don't even have a 200-day moving line. These IPOs can be very good, but yeah, this is interesting. It has the IPO base and then it comes up. Not necessarily bad one. I probably would not be buying this one, but look at that. Funds are 79% of this. So somebody likes them. The cash flow is negative on it. SMR rating. So let's look at yeah, okay. So they accumulate. So they're accumulating it. So that's what's pushing it up. Interesting. Interesting. Okay, Beauty Health Company. Interesting. Okay, well, I really don't have an opinion on this one. Interesting stock. It's really too new for me to really give you a great opinion. I'm afraid, though. A great opinion on this one. So let's take a look for everyone. Let's see, Doggy Coin. Okay, well let's do the stuff with look at Neo. Yeah, unfortunately, Neo is one of these stocks. I don't know if it will see the kind of gains that it made before. It's without Tesla, with the Tesla in a downward trend, Neo is going to have a whole lot of trouble. Um, you know, doing well. The clear leader in the automobile manufacturer, especially in the electrical vehicle space, is Tesla. It really is, and right now it's been pulling back. So with Neo, I think you've got to be. Yeah, I don't really like this chart action. It's just pulled below the 200-day line. I think that Neo was yesterday. That's the thing. The stock market is very, very faddish. I mean, some things that will do great. That's why Apple is so incredible, because Apple has been on top for just ever. It's just amazing. That's a very, very hard thing to do. I think that maybe Neo will be back for one last hurrah, but I just don't think so. I think you got to move on, and it's just one of those things. You got to find out where the people are going and go there, and I don't think that's Neo. All right, SKLZ skills. This is sort of like I think it's sort of like Upwork, if I'm not mistaken. SKLZ. This has been a good area of the market, but this is an IPO, and unfortunately, the chart is just not very good. It's pulled back down to about 14. As you can see, the trend is down. And the funny thing is, the stock market is the polar opposite of the dollar store. In the dollar store, you want to get bargains, you want to buy cheap. In the stock market, that's not as good a strategy, because typically stocks are cheap for a reason. And the reason is because a lot of people are selling them. What makes a stock go up may confuse a lot of people, but the reason the stock goes up is not, and this is something that it's kind of hard to kind of internalize, but the reason a stock goes up is because the people that are already holding the stock refuse to sell it at the lower price. They refuse to take the ask. They will only take the bid. And if this goes on long enough and the strong hands are in control of the stock, it goes up. That's not the case with skills. A lot of people are bailing on this, and a lot of people are selling. So I wouldn't be a buyer of this one. It's below the 200-day line. It's just not a good stock right now. And you see, a stock can be good, and then it can become bad if it gets into these downward trends. You just don't want to buy a stock as it's moving lower. And the reason that you don't is because that's catching a falling off. It's like, yeah, I mean, it's like I got a good buy on it, but it went down even further. And that happens a lot more than you think. Stocks typically go down faster than they go up. So, all right, let's look for Mikhail. Let's look at NVIDIA once again. I think we covered it before, but let's look at it again. Again, it is pulling back right in front of its split. Remember, if anyone's been watching me, I've been talking about how, it would probably run up until about the 19th of July. Now, I didn't quite get it totally on the money, but it pretty much followed that pattern. We from the announcement, we went all the way up, and then basically this week it's been pulling back. I've totally sold out on the Mondays and Tuesdays. I've been out of this. So I'm waiting for it to come through the split, and it will come through that, of course, on Monday, then start trading as split shares, I believe, on the 20th, which is Tuesday. So right now you don't want to be in the stock. You want to sell it and wait for it to come through that split. It's a 4-for-1 split on NVIDIA. All right. Thanks for the idea of selling NVIDIA. Thank you. Thank you for watching. I appreciate that. I think that here's the thing about NVIDIA. I do think there's going to be another opportunity on NVIDIA, but it's going to come after the 20th of July. Now, what's likely to happen? And again, I'm not a fortune teller, but this is based on looking at a lot of stocks that have split over the years. Typically, what will happen is it will trade up, and then then right before the split, that's when it will reach its peak. Usually, on or near the day of the split. But in the case of NVIDIA, it's sort of been during the week of the split, because we were pretty strong up until about Tuesday, and then not so much. Yeah. Let's see. So we're Friday, Thursday, Wednesday. Okay. So Tuesday, as you can see, when it violated on Tuesday, that's where I was a seller. Okay, if you can see this. Nope. Is that NVIDIA? Okay. That's on the 6th. So this has gotten, you see, I bought on the 6th. Let's see if I can. I have to. This is not quite right. I'm glad I marked this with the. I'm glad I marked this with the. Let's get the correct arrow here, because the 6th. Yeah, see it. I bought on the 6th, so let's see. Let's go back to the 6th. So that's going to be right about here. Yeah, there we go. So it didn't quite. Sometimes with these tools, it doesn't quite get it. It doesn't quite get it right. It was basically on July. Oh goodness. Let's see if we can. It's going to be July 1, 2, 3, 6. So I did purchase in there, and I did sell as well. Okay, and then most of my selling was on the 12th, as you can see right here. Yeah, see right when it pulled back, that's where I was seller. But I was a buyer basically all the way up. And then we sold. I do think that after we come through the split, there's going to be another opportunity. It's a very, very strong stock, but a lot of people are rationalizing their positions now. So that's kind of the take on it that I have. All right. What do you think on? Should I keep my puts on Boeing? Well, that might not be a bad idea, because Boeing has been very weak, and I don't think the travel sector is as strong as people think, as people think it's going to be. It does. Here's the thing about the puts. I don't know for after hours. You might want to close this coming into the weekend, because it's very likely, based on this chart, that we will see a bounce at the 200-day line, and that's looking like it might happen. So I would be rather careful about when these open on Monday, you might see these things move up. So this might be today. You might want to close them at the end of the day. Now, I could be totally wrong on this. It could continue to move down, and of course your puts would be going up. But we're very close to earnings. I would consider closing my puts, because I do think that it could go lower, but I think that we're probably going to get a bounce right before earnings. That's typically the way. You'll get a bounce right before earnings, and then coming into earnings, your puts might not be doing as well. So I would probably be a seller right now. I'd be closing my puts more than likely. All right, let's look at BPPC. I don't know what BPPC is. I don't know. I'm not familiar with that. BEPC. Is that right? Yeah. Okay, Brookfield Renewables. Brookfield. This is a company. They're based, I think, in Canada, and they have a lot of hydropower from Quebec Hydro, I believe. Yeah, Brookfield's Renewables. Okay, yeah. It has been kind of a disappointment. As a matter of fact, the renewables, interestingly enough, this is really interesting. Since Biden has become president, the renewables and the solar has done poorly. You would think it would be the other way around, but it isn't. So right now there's a decline, and it looks as if, this is unfortunately not a good place to be. Let's take a look, and let's look at another area that has been doing good in the energy area, and of course, that's basically the You can see energy, renewables, alternative others. This is almost the worst category, 196 out of 197. Not a good place to be in the market right now, but let's see if we can find an area that is good in the market, and that, of course, is the oils and gas. So let's kind of do a review of kind of where the money is going in the market, and that's very important. The number one group in the market still is oil and gas. No surprise there. This has been the number one group for about the last 3.5, 4 months, basically. And it's the number one group. It was the number one group last week, 3 months ago, it was number 5 group. 6 months ago, it was the 39th group. So it's doing very, very well. It is not changing as much. So we want to see the ones that are getting better. One of the areas that I have been doing that I have liked a lot, actually, in the last few months has been this retail apparel shoes group. And this is interesting. Now, many of these stocks are off their high, so they're not buyable right now. But this is Revolve, this is Boot Barn, Lands' End, Buckle, Shoe Carnival. They're all pretty strong. I did sell my last positions in Shoe Carnival. Shoe Carnival is going to be splitting 2 for 1, and they're going to start splitting split shares on Monday. So it probably will pull back a little bit here. We could see it go higher, but more than likely, but this group is very, very good. So it's kind of an area that you might want to consider. You could consider things in. This is where Boot Barn is, and some of those other retail stocks. Also, Nike, for some reason, is doing very well, and I've been accumulating a position. Hopefully now, and it's not letting me. I'm trying to get there. We go. I think I'm back there with my there. Another area that has been doing particularly well has been the Nike. And of course it's the largest apparel manufacturer in the world, as far as I know, and it has been doing very well. Now it's really not buyable right now because it's extended above the buy zone, but there may be another opportunity on it. And as you can see, I bought right at the top of the buy zone. I probably should have bought this one earlier, as it showed strength, but it's doing quite well, and that is Nike. All right, well, I've come almost to the end here. Let's see if I can do one more. Okay, let's look at, okay, a question on PayPal, whether or not they should buy or sell right now. Let's take a look. And of course, we're after hours, so I don't recommend selling in the after hours. You just typically won't get good prices. PYPL, of course, is PayPal, and hopefully I'll get that in there. There we go. All right, PayPal Holdings. All right, so now we're up with PayPal. It looks as if it closed pretty nicely. We'll see how it opens tomorrow, but I still think this is a good time to to be holding PayPal. I really do. I think it's going to go higher. Well, everybody, come to the end of the hour, and I just want to wish everybody a happy holiday, a nice weekend. I know I'm going to be enjoying myself. I've got to do a little bit of gardening, so nothing that's very exciting. But I just thought I would tell you about that. If you want to get on the Action Trailer, it's super easy to do. Just go to, and I can just get one run right. Oh, that's YouTube. Just go to www. Well, one of these ones I'll get. It's www.senfox.com/Dallas Trading Floor. So until Monday at 2:30. Thanks and everybody, and I hope you have a good weekend and happy trading.